Welcome to the Show Me the Money podcast, Unlocking Property Finance. Join us on an exciting journey into the world of property finance, where we uncover secrets, strategies, and opportunities that can turn your property dreams into a lucrative reality. Welcome to Show Me the Money, Unlocking Property Finance.
Hi everybody, welcome back to another episode of Show Me the Money Live. So good afternoon to all of you, wherever you are. Thanks for joining us. Today we are joined by Frazer from Brickflow, who we'll introduce in a moment, but myself, Sharma, Finura property investor based in South London, and as ever, co-hosted by Marc Champ.
Hi everybody, it is great to be back. I've had a busy week in the property finance world, and it's great to have Frazer alongside us today. So, Frazer, welcome. Shall we tell everybody about you?
Thanks, Mark. Thanks, Ro, and hello to everyone who's watching along. Really good to be here. Thanks for the invitation. For those that don't know, I run the sales effort at Brickflow. We are a digital marketplace for specialist property finance, and we're very supportive of the intermediary market. So brokers and lenders alike buy our software, and that helps them do deals, whether that's their own deals or their borrowers, their introducers. Our technology lives all the way along that chain of the transaction. So yeah, good to talk to you, and yeah.
Fantastic. What would be really helpful actually, Frazer, I noticed you've got quite an interesting background as well. Tell us about your history, how you came to be at Brickflow, and some of your more interesting background going back to the sales and trading.
Yeah, so I first moved to London. I was back in 2013, and I was a entry-level salesperson hitting the phones in retail brokerage. So, not real estate brokerage, but spread bet and CFD trading, leverage trading online. They were, the industry when I got there was very tech-enabled, really. There's B2C facing tech, and then still, teams of brokers and salespeople managing those accounts on the desk, but largely the client activity happened online. So I spent a bit of time in that space at both private companies and listed players. In contrast to the world I'm in now, there was, really significant regulation change happened while I was in it. For the good reason as well, it came from a good place, but I saw the challenges that brought and the unintended consequences that overregulation brings as well. So kind of came out of that battered and bruised, but with good learnings. And after that time in that space, I went on to sell virtual data rooms for M&A professionals. So I worked for a US software company that was, private equity owned. It's a non-regulated space. It's, ultimately a very high margin hosting business. And we were normally selling to the investment bank, sometimes the lawyer, sometimes the private equity, sometimes the end corporate who might be, buying or selling a business. And our software lived in the part of that transaction from a due diligence perspective. That's what brought all the professionals together to make a deal happen. And so that was a B2B software play. So my background, purely by accident, is both B2C and B2B software. Always in finance, again, purely by accident. And I was introduced to Ian through a bit of a freak encounter, but I, saw what Brickflow was about, saw that there was an opportunity. I kind of couldn't believe it hadn't been done, or that space hadn't yet digitized at least a little bit. And I helped raise some money, brought some investors to the cap table, and then came on and joined, and here we are. So it's been a bit of a whirlwind, but good fun. Yeah, so I'm enjoying it.
Amazing.
Brickflow. Have you come across Brickflow before? Have you used them? Because obviously I've been dealing with Brickflow for quite a while and been aware of the software and the benefits to it. But I just wondered, as an actual investor, have you seen them about?
Yeah. So it's a good question. So I think I connected with Ian a good few years ago, and I did play around with the platform when I was looking at potential funding options for deals. And I think I've used it probably 2 or 3 times over the last couple of years, where I've used it just to assess deals and look at get a temperature check of the market and what sort of lending options there were. I've not actually executed and used a lender through it, but when I've been assessing deals, it's been really, really interesting. I'm sure it's been through a few iterations and changes since I last used it, but as an investor, it's definitely got its benefits, and I understand that brokers can use it as well. So perhaps just give us an overview of what Brickflow is for those who perhaps haven't used it before.
Yeah, sure. So I'll explain kind of the concept and where it comes from. And, Ian, our founder, was a broker by trade and saw a need or a gap for an aggregator in the specialist property finance market. As far as we know, there hasn't been at scale this solution that says this is where your main development finance lenders are, this is where they're pricing, this is their deal appetite, and the same for bridging, the same for commercial term. In the resi space, this tech has existed for quite a while, be it Trigold, Mortgage Brain, 27 Tech. It's a pretty well trodden path. And I guess because it's a bigger market, it transacts at a higher frequency, it's natural you'd understand that gets digitized first because it's a bigger market, and what we do is left to the end. But the premise of the software and where it comes from is that in most other industries, nearly every other industry, the borrower, in our case, or the consumer, is the focal point of a journey around a transaction. So any big name you mention, any big tech firm, Airbnb, Facebook, Amazon, Rightmove, they are all focused on the end consumer being the most important person in their ecosystem. How often they transact is probably a side note, but the value they bring to that individual is what keeps eyes on the screen and what keeps ultimately space they can sell or monetize. And so we at Brickflow kind of have that mantra that the borrower is the most important person in the transaction. So that's where it comes from in terms of a mission statement. And the broker on the other side of it, brokers who buy our software is twofold. It's one, to give them market visibility that you've just described, Ro, a temperature check on where the debt market is, where it's pricing. Often there isn't a deal at hand. It's they're thinking about doing something and they don't kind of need to have a long drawn out conversation about it. They just need to know roughly where the market's pricing. And that feature is out there and alive and working. The play sort of in the middle for the broker is largely it's a time save and an efficiency piece. They can see all the lenders they need to in one place. They may have already in their head that who's the right lender that's appropriate for this. And there's kind of two ways to look at the software. One, it will enlighten brokers or advisors to lenders they hadn't thought about that might be worth exploring. It also might just confirm what they already know. Guys like Marc who've been lender side, and been in the game a long time, will often know without the need to check Brickflow where to go, but there's still a time save element to come in and just get some pricing quickly and share that with the client. And the overarching, point to all of that is you end up, in theory, delivering best value to the client, and best value to the borrower isn't always the best price. It's deliverability, it's certainty of deal, how is the lender funded that are being approached. So yeah, in a nutshell, that's what it is. For brokers, it's an operational efficiency piece. It's adding value to their client. And we take the view that borrowers are the most important person in the room. If you look after them and you get that right, it means the brokers continue to do lots of business with those borrowers, and the lenders will always be on the other side willing to lend money. So that's kind of our view. That's what the software does in a nutshell.
And it's really good for me as a broker for a number of reasons. But one I've found that I've used it for recently is when a customer has approached us, we've given them terms or whatever it may be, but then they come back and say, we've got terms from another lender stroke broker at this rate or whatever it may be. And then we go on Brickflow, we use the Brickflow system to see who it is out there who might have beaten us. And usually we can pick it out using the system. But then we look across to the true monthly cost. And the true monthly cost is the fees added to the interest rate. So you actually getting a fair picture as opposed to just looking at the interest rate. And we can see that actually our deal that we put forward is more competitive than another broker, and then we can explain that to the customer. So that's another very useful aspect we found of the software. It's been really good for that.
Well, what would you say is the split between broker users and individual investors across your user base?
So the only way to execute a deal on Brickflow is to be a broker or advisor or intermediary partner. So we don't sell our software to borrowers directly, because we think brokers stay in the market. That's our view. We definitely some of their roles might change. It become more of a hybrid solution. We don't envisage people will get removed from the transaction, but everyone can be a bit more efficient, especially on time and more importantly on capital. Put the right money into the right deals with the right lenders. But as a platform, we're over 500 broker users now. So Marc being one of them. We're very close to that, ramping up with a couple of mortgage networks and clubs who are keen to grow the specialist side of their business. So we're in talks there. But on a sort of borrower facing, cadence of leads that brokers generate coming in using our technology, I think year to date we're at 3,500 now. So brokers who buy our technology and put it across introducers, auction houses, land agents, or accountants, listers, whoever it may be, or just in front of their key borrower customers, developers who want to model deals regularly, that number is 3,500 for this year. So we've got a good concept out there that's working. Brokers buy it, they give more visibility to their borrowers, and then they're obviously winning deals off the back of that and executing through Brickflow in the platform.
Brilliant. We often have this conversation.
Yeah, go on. Yeah, sorry.
I was going to say, Mark and I often have this conversation about the benefits of using an intermediary versus going direct. But actually, sometimes, as you say, if not the platform, then certain lenders require the application to be managed by an intermediary anyway for regulatory purposes.
I think
so that's
I think that's it. And look, most of the lenders in our platform, there's a lot of parallels that run side by side, right? There's the wholesale market above most of the lenders, and the wholesale market is pricing, for the most part, is pricing money at similar prices down into lenders that they would term originators. The wholesale guys, the Barclays or JP Morgan or whoever it is, they would look at lenders in the middle and say, you're an originator for me. And the next layer down, of course, is you've got that layer of lenders would just plug into the intermediary market, because that actually works quite well, right? It's expensive to hire lots of salespeople. So they reprice that money and they get really good relationships with brokers and intermediaries. And when you step back from it all and you sort of draw those lines of how the money flows down through the market into brokers and ultimately then into borrowers, you start to understand that brokers are here to stay. And we believe brokers or advisors with our technology, that's a really solid package and should be more than enough for a borrower, even one of significant size, who might have a full-time financial director, to come in and say, actually, the value of me being able to see the market and where it's pricing on a sort of 24/7 basis more than justifies a fee I would pay you in a deal, because the cost of a broker or intermediary is negligible when the money's been put in the right place. And we have conversations regularly with brokers, who've got listed property developers tapping away on our technology on the front end, and it's surprising the disconnect on where even those who are in theory well versed, the disconnect on where they think the market is, right? And so it doesn't take that long for even borrowers who probably wouldn't normally use a broker. They might speak to the challenger banks directly. suddenly when you give them a bit of coverage and then some expertise that isn't just around the finance, the broker and intermediary market have transactional experience. They're doing lots more deals than an end developer or investor often is in a given year. So it's important to remember that, I think, as well, that as much as it's about getting financing, it's actually getting the right financing. You might be able to get it cheaper, you might be able to get it quicker, which gives you time and money back somewhere else, but also just general deal experience, the right contractors, the right QSs, all that sort of stuff. That sometimes gets forgotten, I think, in the intermediary market. There's a lot of value being added by really good brokers and advisors outside of just finance and interest rate. I think that gets forgotten about and should be spoken about more than it is, I think.
Yeah, I agree. Especially like when for us as investors and developers or borrowers, we might be looking at the headline rate and the terms, but actually, what is that lender actually like to work with? How quickly are they going to process the application, get over the line? How difficult are they going to be, or is their legal team going to be when you're trying to get the money across the line? But yeah, it totally makes sense to me.
Yeah, this is it. Sorry, Mark.
Oh, sorry. No. You're the guest. You go.
No, saying and that's exactly it. And I think we've had nervousness from lenders about coming into the platform because they sort of say that this is a portal. We're not going to rank well because we don't compete on price. And I understand that, but my counter is that good brokers and intermediaries who are peddling these deals know that. They know that, but you've got to start somewhere. You've got to start with, as you do in most of the transactions you do in life, start with a comparison. If you go onto Amazon, you search for something, you're looking at a comparison site. If you go on Skyscanner or whatever to fly, you're looking at a comparison. If you go on Rightmove, you're looking at a comparison of property auction. It's all a comparison. And so as a consumer, we're kind of expecting that. And I think for the borrowers, investors on the front end, if they can see that that's demonstrably happened, there has been a comparison, there has been a market search, it's then saying, actually, this lender's really good because I know they're going to lend on an AVM, they've got in-house legals, and this is all going to get done in 2 weeks, and that's worth an extra 1.5% over the course of a year. The opportunity cost is much higher of it being at a bank lender, for instance. It's stuck in legals, those fees are climbing, and you've missed an opportunity. So that's another just part of the journey I think we've been on, is it's just convincing lenders that it's not, you don't necessarily need to worry too much about being in a list here, because that's where the brokers stay in the market. As you say, it's easy for people to get really fixated on rate, and you're saying actually it's not. It's really the cost, the small cost increase, but the certainty that brings is, I think we see good brokers doing that sort of stuff. Right, let's just get things moving and transacting.
Yeah,
and I think it's also very important to mention the regulation side. The fact that we're pushed by the NACFB, so the National Association of Commercial Finance Brokers, to prove to customers that we are providing a choice to our customers, and actually explaining to customers why we have made a certain or given them certain advice. Because there's a lot of times when by the end of the deal, well, it's not a lot of times, but sometimes customers come to you and say, why did you choose that one as opposed to a different lender who my friend has just told me about? And invariably you can say, look, we've looked at all these things, and using Brickflow and the data that you get behind it, you're able to say, the true monthly cost was this, the deposit you needed was this, and this is what you were looking for, and you can tick things off. And then you can show a variety of different lenders and where they sat on the matrix, and compare that to the customer's actual motivations in the first instance. So it really does help. And we produce a product confirmation letter at the end of all of our transactions, and that is something that we have put the Brickflow document, the PDF of all the rates alongside, so the customers can see what we've done and can see that there was options, and why we've picked this particular one. And I think if the FCA ever came by and said, what research did you do on this? You can say, look, here you go. You can see that it's black and white. So it protects brokers as well, and it protects customers, and it protects lenders.
I think that's exactly right. And we, you know, whilst the space and the loans we operate in are unregulated, actually we found that the bigger brokerages and intermediaries and lenders all want to behave as if it is regulated, and often they've got FCA direct authorization, haven't they, elsewhere? And I think the crux of this point as well is, there's the regulation angle to it. I mean, we've heard a few grumbles that there's a bit more to come on that. Whether it happens or not, we don't know. But there's also just doing the right thing by your client, right? You know, it's quite simple, even without the sort of threat of regulation. We've noticed a theme. The biggest volume players we speak to in terms of brokerages, of course, you know, they're very shrewd, you know, businessmen and women, and, you know, want to make some money and all the rest of it. But it's blindingly obvious when you speak to them why they are the scale they are versus others, because they're doing lots of repeat business with people they've worked with for years because they delivered value really early on, and the fees that they charge have never come into question, because actually they're managing to demonstrate that they've done some decent research, they clearly know the market, and Brickflow just helps expedite a lot of that process. But yeah, exactly what you just said, Mark, is really true. And I think, Ro, for you and with an investor hat on, there's an accountability and audit trail kind of aspect to all of this, isn't there? Is if you're raising money from investors to go and do deals, you know, hand on heart, has everyone got the best finance? Have we gone to market? Because if someone's made 2 or 3 phone calls and kind of decided that's where the market is, you know, I'm not sure how long that remains an acceptable answer. Hence why we've had decent buy-in from the intermediary market, right? So I think people understand the value.
I think the first thing any broker will tell you is there's so many bridging lenders out there. There's so many new bridging lenders. They're all doing similar to what each other are doing. And to be able to keep up with that from your, you know, black book, as it were, is very difficult. And you don't know. So sticking it into Brickflow, where their one and only job is to keep things up to date and relevant, it just is so much easier for broker, and you're not missing stuff. You're not missing new things that have been brought to the market and new loan to values. I know there was one lender who was emailing out a lot of marketing stuff, and in the end I turned off the marketing preferences for them. But what it didn't do, what it also did was it turned off all product updates. So they had one marketing and product update channel. So when something updated, I wasn't aware of it, so I turned off their marketing. There are certain times where you're going to miss things, and using the system like Brickflow does benefit brokers and customers. And you know, we've got Brickflow on our website, and we get lots and lots of people using it, and it's something that we advertise to our customers as a tool that they can use, and it really does get people in the numbers of a deal. And to be honest, it probably has, this is going to sound bad, but in a nice way, it's ruined a lot of deals for us, but it's ruined them early so that we've not wasted a load of time, and they can see that a deal doesn't work. So
I think that exact point is really important, because particularly for development finance, slightly different for if someone needs an urgent refinance bridge just to release some cash for, to provide liquidity somewhere else, it's slightly different. But particularly in development finance, that the sort of irony in all of this is it kills things really early. And actually the value of that is huge. But you kind of, as you rightly said, Mark, we can't necessarily sell on that value, right? That has to just be seen to be believed. But if someone's got an idea or they're looking at a piece of land and they say, well, okay, well, what's it going to cost me to build 10 houses here? If they can come to anywhere our software is, like Mark's website, and look at it and just bin it really early, because again the time save is huge, and everyone's got the story. Every broker's got the story of, we spent 3 hours going through this borrower, we went to the lenders, we did all of this, we got a term sheet out, and 2 weeks later we eventually said it doesn't work. That you can take that down to 10 minutes, if that. And that's a
great feature.
Yeah, that's got a kind of exponential amount of value. The other thing that's quite interesting, because that provides a lot of efficiency lender side, right? Lenders getting queries all day long, inboxes full of, what about this, what about that deal? We've got land down there in this postcode. How much will you lend on it? And what we found with lenders is their distribution model. Some of them have really got it dialed down to a handful of key broker partners or packages, and they get some efficiency that way. But what's been quite amazing recently is we're really uncovering that the digital distribution lenders have is quite unknown, and quite up for debate, I think, really, because they're kind of treading a line, of course, because most of them are very, very supportive of intermediaries. So they would always, pair a borrower with an intermediary partner. So that's good. They're kind of holding the line on that front. But you'll have others who will do direct B2C marketing, right? But you've got to do that at real scale and with a lot of budget to start to make that work. And where we're starting to get to, our data picture is starting to tell lenders, look, you've had X inquiries through Brickflow, it's come from these key customers, and these guys are white labeling it, and actually their white label exists in these websites or in these marketing channels. That full picture for a lender is really important, because they sort of know they're getting measurable digital distribution and supporting their broker customers in doing so, right? So that's like another interesting thing that we've just found on the journey, is how lenders distribute and originate deals is largely built at the moment on, get some great salespeople in and keep spending on marketing. And if your funnel's wide enough, by the time it washes through, you'll be fine. But in a slightly tougher market, slightly less deals floating around, less liquidity, you want to be more dialed in on where should I spend that's going to work. And between the software and our customers, we're starting to be able to paint that picture, which is important, because it is largely, I think, even regardless of where you are in the lender scale, there's a lot of unknown spend that happens on the proviso that we'll do enough of it and it'll land, which is just that's just an interesting part of the process that we're learning, I guess.
I've got a question for you. How many lenders do you have on there at the moment, and what is your pre-qualification criteria, I guess, given that there are so many new lenders coming into the market all the time?
New lenders, yeah. So we're about 90 lenders, maybe just under at the moment. But they provide over 130 products in the market. So you'll have, obviously, lenders will have a different iteration of bridging, perhaps. They might have different leverage appetite depending on locations, that sort of stuff. So just under 90 lenders for over 120, 130 products. With commercial is our sort of newest product. It's been live for a little while, but there's 18 lenders in that corner of the platform. We think that should be more like 35. There's a handful on the shortlist. But it's just taken a little bit longer to get through the layers, at the banks. As you can imagine, it's more high street banks that are the last ones to come on. So due diligence wise, it's a really good question. We often ask, how are they funded? So if it's private capital, is it demonstrably private capital, and how much private capital? More often than not, there's some private capital and then there's some institutional money. We do ask where the wholesale funding line is coming from and who it's provided by, because we also, in the nicest way, we have to referee to an extent where some of the lenders say they're willing to deal, and then where they actually deal. And us knowing more about the wholesale funding market behind them helps us do that, because actually we kind of know that, you're paying this for the money. We know you can deploy it at roughly these margins. But, naturally people are keen to do deals and they want to come out very aggressive. So we sort of politely referee what they sort of say they're going to do and then where they actually offer terms. And that'll be a never ending challenge we have. But yeah, and then it's funny. Yes, we do. I mean, some lenders aren't too forthcoming about who's funding them. Others have the opposite view, and we see it all in the press, and there's an announcement on LinkedIn or in an industry magazine. So we do have dialogue with most wholesalers now in the market. So we see that as part of the process, right? Is how do you build a distribution engine big enough to help wholesalers support their customers, which is the lenders, to distribute more. So we're always going to want to have a relationship at a wholesale level, purely from a learning perspective and criteria perspective as well. How heavily do they underwrite, the lenders underneath them. And I think that's another point as well, is you'll find, and we're learning this all the time, and this is what we will be publishing soon to brokers, is, you'll have money from one wholesaler goes into a lender, but that particular lender has full control. There's no second underwrite by the funding line before the money leaves the door. But you've got a few lenders down the road who might be on similar priced money, but the funding line is looking at the deal before the money leaves. And again, Marc, as I'm sure you'll know, even really good brokers in the space have all got a story of, this went through credit, it was all approved, it was 2 days before drawdown, and the funding line looked at it and said, we're not doing it. And you're then left with someone on site with bills racking up and contractors to pay, and the funding's been pulled 2 days before by the funding line. And
I think on that, I would say there is a decent percentage of property investors that don't realise that the money isn't actually the bridging lender's money to lend.
Yeah.
I would say, if I was to hazard a guess, 25%, I would say, think the money is actually the bridging lenders and not a funder in the background.
Probably more than that, Marc, actually. I think probably more people just don't realise that. But it's a great point, because, like you said, Frazer, I've seen a number of posts where people have said, can't believe what happened just 2 days before completion for exactly that reason. So I've got a question for you. How do you...
Sorry, go on. Sorry.
No, go for it.
I was just saying, but that whole point comes back to the original point of the borrower isn't being put as the most important person in the transaction, because understandably a wholesale provider would want to look at the deal before the money goes out the door, particularly if it's a development deal and it's a reasonably big ticket. It's high risk, they're going to notice it, it's on their spreadsheet, it's a line they're looking at. But why isn't that happening earlier in the process, before the borrower has taken on a load of obligations to start on site? And exactly. That can still happen. There's nothing wrong with that happening. I don't think anyone would disagree. There's money at risk. People need to know it's on good deals, or deals that have a palatable amount of wiggle room in them. So no one disagrees with that fact. But why isn't that happening 8 weeks before?
Well, I think the answer to that The answer to that is probably the fact that I think it's something like only 35% of decisions in principle actually ever go anywhere. So
Right.
the funder, whose main job isn't to scrutinise the deals, will probably be wasting a lot of their time and resources and think that's the lender's job. So it's the lack of communication, I suppose, between the funders and the lenders. So maybe that's putting the emphasis on the lenders to be more in tune with their funding partners than the funding partner pulling it at the last minute being the issue.
Yeah.
If you see what I mean?
Yeah, totally. And it's not. It's never. It's not an easy answer, is it? Because you understand as well why a lender who's aggregating maybe a few different funding sources, they've got a certain amount of money for these types of deals or that geography or that ticket size, whatever it is. So they're aggregating themselves in an effort to provide good value to their brokers and borrowers. So I think it all comes from a good place. But what you then into, as that business is then into the kind of pressure of, we now need to deploy all this money. Okay, we've now got to deploy it. There's fees for not deploying it, and so there's a race to deploy, and that in turn creates, do you then just create some tension because actually we've now got to deploy this? Do we need to move up the risk curve in the type of deal we're willing to do? And that then you can see how that washes back up the chain to a wholesale provider, right? Go, all of a sudden we're right at the top of the leverage risk curve here. We need to have a look at it. But I think it's a never ending, and hence for all of those reasons, it's obvious to see why you need decent brokers and advisors in the middle of it, thinking about all of that stuff, thinking about it and refereeing it. And but really interesting. But sorry, Ray, I think you had a question.
No, my question is very much linked to your last point, actually, because it's great that you have that insight as a platform, because that's forming part of your due diligence process in terms of when you're onboarding the lenders. But how can we, other than the brokers, other than relying on brokers and intermediaries to use their knowledge, how can we, as the borrowers or the investors, how do we benefit from that insight that you've gained? Does it actually shown the platform in any way? Is there anything that helps us to understand what funding lines are for those lenders that we might not have known about otherwise?
Yeah, really good question. So we will publish it soon. We won't necessarily publish the names of wholesale providers, but what we will do in the platform is you'll be able to filter and separate lenders by institutionally funded or privately funded. So that's a real good one, because there's a really good opportunity for private capital in the space, because there's fatigue from brokers and borrowers for reasons we've just described. So actually, to pay a bit more for your money but get it done 2-3 weeks time and get some certainty that you've spoken to one person who is, to all intents and purposes, is head of credit and head of sales. They can, if they're going to do it, they're going to do it. The loan agreement's there, they're signed, and you draw down in a couple of weeks. That's it. So we will start to differentiate between private and institutional funded, and then what you might find in there as well is you'll then get another layer of criteria in the platform, because you will have the lenders who are a blend. We'll start to list more products, right? This is the institutional product, this is our private product, and if we, that's the first cut. There's potentially another layer up that just can start to give an indication of cost of capital. But again, that's probably not something that gets published. It's probably more something that's an ongoing research piece. But a couple of the big four players want to work with us on that, because there's a lot of it is unknown, and rightfully so. A lot of it might be a US PE fund that sits behind a lender. To all intents and purposes, it's private capital, and it will remain so. And they don't want to be known. So there's discretion out there that is rightfully, people want to maintain it. So we understand that. But the first cut will be
pricing. I guess it's pricing and market sensitivity as well.
Yeah, exactly. And ultimately, I think there's lenders with an appetite that changes. Their criteria will change with appetite, and we see that in the platform quite a lot. You'll get a broker will run a search, and our technology will have matched the criteria perfectly: the LTV, the location, the type of deal, it's heavy refurb, for example. And it goes through to the lender, and they look at it, and the rejection reason will be, look, we're over deployed in that area. We're not going to do it. And that's the other thing that's quite hard is our technology's done everything it's supposed to do. The lender's criteria is correct. The broker's done the right thing, getting the deal through, but the lender's appetite's changed because they're deployed around the corner. So understandably, they don't want to take more risk on in that area, and that's okay. That's going to be that's the way this market operates, right? It's largely driven on appetite as well. If people want to deploy really aggressively, they'll drop rates or increase prop fees or whatever and get money out the door, but they might step back from that once they're deployed.
But going back to the point about the proving that you've done your research, that what we're getting back from your system that would say the reason we're not doing it is because we're deployed elsewhere in that area, it's a good reason to then put in your product confirmation letter. So this information is key, and hopefully will make it easier that the broker can prove that they've done what they're supposed to do.
Yeah, absolutely. Ro, I ask you a quick question. As an investor, what's your when it comes to financing, what's often the biggest unknown or kind of hurdle you have to get over, be it yourself or co-investors, or if you're raising money for a particular deal?
Yeah, I think we've touched on something here actually. So you've provided some great insight. I think the key thing is the underwriting process and how long it's going to take to get a decision, and ultimately, what's it going to take to get the money over the line? We call this show "Show Me the Money" because it's like what is happening behind the scenes to actually get the drawdown. And I think a lot of us are enticed by headline rates and loan to value, but actually, sometimes raising the finance or getting the finance unlocked can be the most stressful part of any property deal or transaction. So for me personally, it's, I guess, having a bit more insight into who that lender is, how they work, and are they going to deliver quickly and efficiently without making too much of a meal of the legals. That's probably the biggest thing for me.
Yeah, it makes a lot of sense.
It goes back to, as you were saying, funding lines and things like that. Are they going to be secondary credit committees or another level of underwriting? Actually understanding that is great, and I appreciate that we might not always see that as the borrowers, but as long as the intermediary has the tools and the insight, or is gaining knowledge from the platform to better advise accordingly, I think that's a real game changer.
One thing I would like from the platform, if I had a wish list, would be the ability to see what type of valuation is going to be done, because some bridging lenders will use market value, some will use 90 day, some 180 day, and then on the HMO side, some will use an investment valuation and some will use bricks and mortar. So to have a steer on that will make a difference to where a broker places a deal for the customer. Because if you're using say you're going through a deal and a bridging lender is going to use an investment valuation on a 5-bed HMO, for instance, and you then need to exit onto using an investment valuation onto a long-term HMO lender, it's going to be very difficult to marry that up, because we already know that most lenders won't use an investment valuation. So the customer's going to be in a real pickle with that. So it's really important, that point, and I think that is something that I'd like to see as an added extra. So if you could just do that.
Well, your prayers will be answered, because we have roadmapped that, so that is a feature that's coming. And the other point you made, Ro, as well on underwrite. I mean, those three features, if we just think about it for a second, are really useful, aren't they? So you come in, if someone's privately funded or institutionally funded, or maybe there's optionality. You can choose either way. If someone's got both options, it's the same name above the door, the same people. but you might pay a premium for private because it's their money, or it, they know it'll touch the sides of the credit box from the wholesaler, so they'll do it themselves, but it's a bit more money. The valuation point is a real big one. We've had that off, particularly the sort of bridging market as well. What value is it going off for auction purchases and all that sort of thing. So yes, that's coming. And then also, if you're choosing an institutionally funded lender, is there a second underwrite required, right? Because if it's an institutionally funded lender and there's no second underwrite required, you're then probably in quite a good spot where if you've got time on your side, you can take a bit of time, you can execute on institutional money that might be a bit cheaper, and you're knowing that the credit and underwrite team at that lender have passed the test from the wholesaler that they're trusted. They're trusted to deploy their money without them looking at every deal, and I'm sure they'll audit once a year on a handful of deals. But those three things in itself, none of it's about price, is it? It's just about knowledge. It's about certainty and am I in the right place? So yeah, they're all really good points, and will work its way into the platform in the near term.
Look forward to seeing that. That's great.
Yeah. Well, I think your product is leading the way in the unregulated space, the space that I deal in. And I know there's been a few attempts at doing what you do from other people, but I've never seen one as user-friendly and as comprehensive, because a lot of the time, a lot of lenders won't sign up to these types of platforms, but they're a little bit worried about them or whatever. But I think now yours is definitely leading the way in our space, and I would encourage any of our listeners to actually get in there and use it. It's really important, and I feel that it's going to go even more this way. The way AI is working and all the stuff that we see technologically based really is going to push our side of the market that way even more. I think there'll be a few people go kicking and screaming, but it is something that we're going to have to embrace, and I just hope it doesn't wipe out brokers full stop, because I can't do anything else. So
no, it definitely. The interesting thing is what you said there is that the platforms managed to lift off a lot of administration on the borrower front end. So there's the borrower front end, which means it's the broker front end. You can only have one with the other. So, but as we move on, we will start to lift as much administration off the desk of lenders into the platform. So all of those things you discussed, there's lots of interesting AI out there that can sit on top of our application. There's automated valuation models. I mean, what happens in terms of valuing properties as well, not just an AVM, but the next iteration of that. I heard of a company the other day that flies a drone round the site and maps the software. Maps the site in real time. And you can get a credit report done back with an AI scan over that footage done in less than an hour, right? So,
and I know a lender that's using AI to condense valuations. So they're just getting an overview, they're sticking it into an AI system and literally getting the overview of the property, and that's it.
Yeah, and I think that's it. And the underwriting process at lenders varies again for reasons we've discussed. Because are they doing it privately? Is it institutional? Are they more taking a view on something? But there's a lot of admin can be lifted into the platform that side. But again, we always come back to we're very focused on delivering value to the end borrower and investor. But the premise of the platform is built on deals being delivered through it, and the best person on average to deliver a deal with some certainty is a broker or an advisor. So we that's our market view, and we think as long as we keep delivering value to brokers and borrowers, the rest of it will follow. So no, you're all good, Mark. You're here for a long time yet.
Thank God.
Amazing.
Good. All right. Well, unless Ro, you've got any more questions for Frazer, I think we'll wrap it up.
No. I think that's brilliant. Thanks, Frazer, very much for joining us. I think it's been really insightful, and definitely encourage all of our listeners and viewers to have a play for the platform. And I guess what they need to do is just go to the Brickflow website and just sort of register. They need to register. Is there a fee? Is it how does it work in terms of end users using?
Yeah, so brokers, there's a pricing page on the website. So depending on how, what you want to do with the tech, depends on the price. If you're part of a mortgage club and network, there's probably a discount been agreed for you there. So just get in touch and we'll let you know the state of play. And yeah, if you're a borrower, it's all the tech you see on brickflow.com is exactly the same as what Marc has on his website or any of our other partners. So I'd encourage you to go to wolffinancial.com and have a play around. You can see what it can do.
Amazing. And that's been really insightful, and looking forward to seeing those new features as well. So thanks very much for sharing all that information and sharing your time with us.
No, thanks. Appreciate that. Thanks for having me, guys.
Thanks a lot, Frazer.
Amazing, and we'll put your contact details as well in the notes as well. So please do connect with Frazer, and if any of you have any questions for us to ask guests in future as well, please do drop us a line. So thanks very much, everyone, for joining.
Thank you very much.
That concludes another episode of Show Me the Money podcast, Unlocking Property Finance. Connect with us on social media, where we share additional tips, resources, and behind-the-scenes insights. Feel free to reach out to us with any questions or topics you'd like us to cover in future episodes. Until next time, keep exploring, keep learning, and keep making those smart investment moves. This has been Show Me the Money, Unlocking Property Finance.